Hi final salary pension subscribers, and welcome back to the channel. Today we are going to be discussing CETV values 2021, a comparison to 2022, also back to 2020, and whether you should really still consider a pension transfer with current CETV values. Okay, so what happened in 2021 and across 2020? So if you know anything about cash equivalent transfer values, you will understand that there is a negative relationship between gilt rates or interest rates, is more easy to think of, and CETV values. As gilt rates and interest rates go down, CETV values will go up. The reasons for this are to do with the revaluation methods inside your scheme as to what they would need to pay you as a future value versus a present value. Okay, so what you want for as good a CETV as possible is a low base rate from the Bank of England in the UK. So why do people talk about 2020 and 2021? Well, as you can see quite clearly here from the Bank of England website, in 2020 and in 2021, the base rate in the UK was an all-time low of 0.1%. As such, the CETVs that we saw across 2020 and in particular 2021 were some of the highest that we've ever seen. We have another video talking about are CETVs still rocketing, etc, etc. So you can have a look at that if you need to. So what does this mean? And if you saw the chart as well, you will see that base rate has now gone up to 0.75 basis points, I believe on the 17th of March 2022. On the 5th of May 2022, this video might not be published by then, the interest rate will likely be reviewed again by the Bank of England and possibly raised to 1%. Okay, so what is happening here and why is the base rate going up and down? So as most of you will know, the Bank of England and the Fed in the US have been trying to stimulate the economy really ever since the financial crisis of 2008. What they believe is, and by behavioral economics in finance, if you lower interest rates and base rates, it means people will not go and save their money in the bank. Why would they? If they're only going to get 0.1% interest per year, it's literally nothing. There's no point. Inflation is far higher than that. So they want to encourage people to go and spend their money and stimulate the economy. What the government unfortunately has had though is that over that course of time, they haven't brought interest rates back up to where they were before the financial crisis, and then we also had the pandemic. When you look at things such as the pandemic, governments need the economic lever of interest rates to be able to pull on those levers to stimulate the economy. They didn't really have that as much of an option during the pandemic, so instead they just printed money. Printed money and printed money and printed money, which now we are seeing one of the big problems of, which is inflation rising. So what does this mean for you in 2022? What I can say with almost certainty is across the remainder of 2022, you are not going to be getting a better CETV value the later that you leave it throughout the year. The reason for this is that the Bank of England will likely want to raise interest rates to 1%, 1.1, 1.2, 1.25 across the course of the year. And they've said this in their minutes from the recent meetings. So what you have to accept is you are not going to get as high a CETV value as you would have got in 2020 or 2021. Some clients might say, well, I'll wait for the next financial crisis. And when there's the next financial crisis and we go down to 0.1, that's when I'll attain my CETV value. I would say it's a very poor strategy. From where I'm standing as CEO of Cameron James, I do not see final salary pension transfers being here possibly over the course of the next 12, 24 or 36 months. I think the industry is getting so strict, the FCA doesn't really enjoy people transferring out of their schemes because they believe, and possibly rightfully so, that people should be maintaining their safeguarded benefits. For some clients it's suitable, for other clients it's not suitable. I'm not going to quite go into suitability on this video today, but that's just a bit of a side point. So basically you need to get on with your CETVs. If it was my opinion, if it was my CETV, I would be requesting one straight away. If you can get it done before the 5th of May 2022, great. If you can get it done as early in the year as possible, great, because either interest rates will continue to rise. Now, to give you a little bit of an example, we had some clients, and I'm going to be quoting some figures here, and the clients who are subscribed to my channel will probably know this is their exact pension. Well, I had one client earlier this year who he had a cash equivalent transfer value from, I believe it was January or February. He came through to me, it was 770,000. Client was pretty happy with it, relatively young guy. Then he said to me, Dominic, you know what? This CETV, I had a pay rise that isn't fully included in this. This CETV only has 9 months or 6 months of my higher salary. It still includes 3 to 6 months of my older salary. I've checked with the scheme, and actually, if I wait until the 1st of April 2022, if I request a new CETV, it should go up in value because obviously my salary will then be the full 12 months of my higher final salary. This is what we did. Unfortunately, on the 17th of March, interest rates, the base rate went back up to 0.75%. The client's CETV value came down from 770,000 to around 710,000. That's £60,000 difference, which I believe is purely based on the base rate change from the Bank of England, despite the fact that the client's extra salary had also been included inside that CETV. So this just goes to show there's a very, very strong negative correlation between the base rate from the Bank of England in the UK and the cash equivalent transfer value that you will be offered. As such, it is a good time to get your transfers done. You haven't timed the bottom of the market. You didn't manage to get it done in, say, November 2021 or the summer of 2021 when we saw very good transfer values, but still you're being offered a very good rate right now because the base rate is still at 0.75% or slightly higher by the time this video is published. If you look at the long-term trend of interest rates, you will remember yourself when you used to open up your ISA and get 5, 6, 7s for some of the older clients, even 12% returns on your ISA accounts or on your savings accounts at that point in time because interest rates were so high. You have to remember we are still in a very artificially low interest rate environment, and it's a good opportunity to take advantage of your cash equivalent transfer values while we are still keeping interest rates low to try and stimulate the economy. Guys, I hope this has been useful. If you would like to discuss your CETV with me in person, you can book yourself in below via the Calendly link in the description. This will take you through where you can click the day and the time which is most suitable for yourself. You can also go straight over to the website and book yourself in for a consultation, or you can also contact me via WhatsApp, which you can also find in the description below to have an ongoing conversation with me, a little bit more informal before we start an official appointment. Guys, I hope this has been valuable. Let me know about CETVs if you feel annoyed, if you've had a good one, if you've had a bad one. Any other videos that you'd like me to do on cash equivalent transfer values, I'm more than happy to take your requests, so please let me know in the comment section below. Guys, have a great day, and I look forward to speaking with you soon. Thank you.